Hello world, hello Australia, it's Jamie Burke here, the Crypto Koala. Now today guys, I've got the director of Ainslie Bullion. It's Paul Engeman. Great to have you on today, Paul.
G'day Jamie, good to be here mate.
So you're based in Brisbane, Queensland, and it's great to be in the same time zone, and it's great to be interviewing an Australian business. I'm based up here in northern Queensland and based in Mackay, so it's so good to be talking with you. I guess you guys are, being in that area, it's good to be in Queensland, Brisbane.
Absolutely mate, best part of the world.
Yeah, definitely. I love Brisbane, and especially love, South Bank and what it's all got to offer there. So Paul, tell us a bit about yourself and tell us a bit about Ainslie Bullion, the actual business.
Yeah, sure. Well, very briefly on me, I'm actually a qualified engineer by background. I did a few years of that, and then that really led to 20 years in residential property development. And then 6 years ago, I came to Ainslie Bullion. So who we are is we've been around since 1974. We're one of the largest bullion dealers in Australia, and we combine it with crypto, with the largest bullion and crypto dealer in Australia. So Neville Ainslie started it back in 74. In 2004, my father actually and Jeff bought the business. They've since both retired, and Steph and I have bought the business, and we're the two directors now. But we're basically your traditional bullion dealer, selling gold and silver and platinum to investors. And then in 2017, we added crypto to the mix as well, doing then the big five, and now we've expanded that to sort of the big 10. And yeah, so it's exciting times to be in the business too.
Yeah, definitely. It's very exciting times. So it's great to hear that you're like a family business as well, and that, it's been passed over from your dad into yourself. So it's been really exciting, the recent launch of your gold and silver standard digital assets. Recently, I noticed that on CoinSpot, the Australian exchange. So could you tell us a bit about that? For me, it looks like you're the first movers in that space in Australia. So
yeah, it's look, there are other gold-backed tokens around the world, but what you find pretty quickly when you scratch the surface is you find yourself in the Caribbean or Malta or some reg-like jurisdiction. Yeah. And then you find that you often can't exchange those, trade those on an exchange or buy them on an exchange. So in that sense, absolutely, we're a first, certainly in Australia. It's all based and domiciled in high reg Australia. That wasn't easy. It took us a long time to get to where we are, but we're there. So we now have, basically a link between the blockchain and gold and silver, and able to trade those now openly.
I feel a lot more confident, actually, if I want to get exposure into gold and silver, actually going onto an Australian exchange. And I've been using CoinSpot for the last couple of years, and I really like it. I like its features. I like the way it's set up. And just be able to access them gold and silver standard tokens is really great. So could you just give us, as you mentioned, if we was to buy a digital gold asset over in, say, Malta or somewhere like, I don't know, like somewhere in Europe or developing country, I want to make sure that the peg is genuine, and I want to make sure that that physical representation of that gold and silver token is correct. So Paul, could you just tell us, please, how is that? How do you keep that peg true? How is that genuine?
Yeah, look, ultimately, it's because you can redeem these tokens for real physical metal. Okay, so once you do that, arbitrage comes into play, and arbitrage will always, through open markets, bring that back to that sensible peg. Practically, in the short term, so you've got two options. You can buy up CoinSpot, as you said, or you can buy up Ainslie Wealth. Both of those literally take a live feed of the spot price to establish that price. So that is your peg there. If for whatever reason that broke down, you then have arbitrage comes into play, where if it gets too high or too low, obviously people will capitalize on that, and it brings it back to that peg.
Great stuff. It's good that with, bit different than with cryptos, a lot more volatile. But what I'm noticing with the gold and silver tokens, there's a lot more stability there. Of course, they do fluctuate a bit in themselves, but if someone wants closer to a more stable currency to sort of tap into, the options there. So it's interesting how you guys have diversified from crypto and you're utilizing blockchain. So how does blockchain assist you, your business and your clients? And basically, does it assist you with that peg as well?
Yeah. Yeah, look, I guess there's probably two levels to that question. So in terms of blockchain as a business, as I said, back in 2017, we identified that there was this new asset class really coming to the fore. Okay, so and it had parallels with gold and silver. We were certainly getting a lot of interest expressed from our customers. So as a business, we said, okay, we've got traditional gold, silver, and platinum, but here's this new asset class that shares the same properties, and there's demand for us. So we launched those into the business, and went through that heady late 2017 period. That anyone trading us would remember, there was literally 2-hour waits in our waiting room, which is untold. So
Wow.
but we were the only ones in Australia doing OTC. So if you literally want to deal with a human, deal in high value, and walk out with one of our cold wallets, then we literally had people flying around the country to come here. Then I guess more recently, it's okay. So blockchain's a technology. Ultimately, we've got gold and silver, and for some people, the hurdle is, how do I get it? How do I store it? That sort of thing. So combining blockchain with gold and silver was a logical step to overcome those hurdles. So the blockchain then allowed us to digitize bullion, but do it in a way that we do it, so that it's very, very, very transparent, very secure, and you're dealing with someone you can trust. And that was the combination that led us to that.
So it's great that, blockchain is being immutable. It puts that trust in there. So, the books can't be fudged. You can sort of give an accurate representation. If, say, you was to be audited, you sort of got that record there that shows a true representation of what physically is there.
Yeah, and look, and we even preemptively do that audit. So we have BDO audit this every quarter. And the latest one just happened, so it's up on the website for anyone to see. So yes, we've been around for a long time, and those that know us trust it, but let's not rely on that. So we hold it in a clean company that's got no other assets or liabilities other than the metal and the tokens. The metal's held in reserve vault, which is a high security independent vault. It's fully insured by Lloyd's, and it's audited by BDO. So we made sure we address that trust issue up front, and remove any trust of us from the equation, essentially. And the blockchain takes care of the rest.
Great stuff. So with the actual blockchain, you actually chose Ethereum, a public blockchain, and your tokens are ERC20 tokens. So I'm seeing that Ethereum's maturing. It's moving into that DeFi, decentralized finance space. But what are your views on Ethereum, Paul?
Yeah, look, and I have heard that I think there's some shares and bonds that have been issued on Ethereum, so it's getting into that space for sure. For us, ultimately, we chose Ethereum because of the security, the cost, and the speed, and the other thing too was the flexibility in the coding. This has not been a simple. It from all appearances might look simple, but it's not been a simple exercise. And the fact that because we are dealing with digitizing a physical asset that has real live costs, okay, so we have to store this stuff, that has a cost. We have to insure it, that has a cost. We have to audit it, that has a cost. There's the spreads in buying the metal, etc. So what the Ethereum chain allowed us to do is code in that transfer fee of 0.2%, so that can pay those real world costs, and then give people the security that Ethereum provides. That said, it certainly allows for or contemplates that there might be a better technology or blockchain one day, and we can transfer this. But at this time, Ethereum was the best course. But I'm just reminded, just topically, Jamie, sorry, I talked about the real world costs.
Yeah.
And I know when CoinSpot listed it, some of the commentary was about the spreads in silver. And it's a fact of life that silver has much higher spreads than gold, and they need to be passed on through the tokens, because the tokens are a digital representation of real bullion. So it's just worth noting for your listeners that spread with silver is by virtue of the fact, and look, despite silver's 4.5% jump last night,
yes,
that gold silver ratio is still at 80. Okay, so you're still, if you're making a kilo bar of gold or silver, it's still a blob of metal that's put into a kilo form, but one is worth $75,000 and one's worth $950. So you can see as a percentage, and a lot of that spread is production cost. So as a percentage, you're going to have a bigger spread in silver because of the production cost. And it's also heavy to transport. bulky to store, etc., etc. So yes, the spreads are greater because that physical reality of silver. But I tell you what, at 80 to 1, which is still twice the sort of 100-year average of the GSR,
Yeah.
a lot of people don't really care because, you know, the reversion of the mean would see sort of hundreds of percent when, you know, when a few percent is all we're talking about.
Sure.
So I thought I'd just touch on that because it's just one of those realities of the physical that we're dealing with.
Yeah, sure, understandable, Paul. But if I weigh up between the two, actually, it's a lot easier and a lot more convenient for me to go onto the CoinSpot exchange and to buy it, transfer it, and put it onto a cold wallet, onto a ledger or something like that. And it's a lot more convenient and physically holding it in my own home, gold or silver. So,
yeah.
I recently watched, and you had a really good video that you made, and it introducing your gold and silver standard digital asset tokens. And something I noticed with Chris Tipper on his desk there, he had the 100 trillion Zimbabwean notes.
Yep.
And that really sort of pointed out to me the effects of hyperinflation. I think that's, you know, the same to you guys. It's something that you're aware of. And I just would like to know, you know, how gold has kept hyperinflation in check in the past, or how you know the standard pegging it to an actual currency, you know, keeps that in check.
Yeah. Look, in Zimbabwe's one example. We've got a more contemporary example of Venezuela. You know, people know of the German Weimar Republic one. This has happened time and time and time again throughout history, where fiat currencies fail, and they fail through hyperinflation because ultimately they're just based on faith, okay, and faith in the government, and governments abuse that power. They print it hand over fist like they've done more recently. So whilst ever you have greed and I want to get re-elected at play, then you're going to see abuse of fiat currency and ultimately the failure of it. The gold standard basically brings discipline into the equation, okay, because you cannot just simply create more gold at any sort of pace. And so whilst ever you have a currency backed by gold, all of a sudden you have discipline. Politicians don't like it because, you know, it's discipline and you can't buy votes. But it's what's happened time and time again throughout history. So yes, it's we have those notes around because, you know, they were literally not worth the paper they were printed on.
Yeah, it's a friendly reminder, isn't it? You know, of what potentially and it is happening now. You know, even with the US, they just constantly printing money, and the thing is, it's because it's as you know, it's a global reserve currency, and that's somehow giving it some immunity. And I look at Russia and I look at China, and they want to, and they've had it for years. I guess with India as well, that they're trying to diversify away from the US dollar. You know, what are your thoughts on that, Paul?
Yeah, look, that China-Russia thing is one to watch because that's, you know, over the last few years, that's really ramped up, and you cannot ignore what appears to be a very strategic move from two very large powers into gold. And so, and for context, let's remember, China are by far the biggest producer of gold in the world, 450 tonne. They keep every ounce of that, and on top of that, they're the biggest importer of gold in the world. So they are consuming gold at a rapacious rate. Russia, their central bank has been the biggest buyer of gold over the last couple of years amongst the central banks. So again, they're moving away from the US dollar and they're moving into gold. They are not in any way enamored with the US's conduct. So the US are essentially weaponizing the US dollar. So it's not just about printing $4.5 trillion new of it. It's the fact that they're weaponizing it through sanctions and this sort of thing. And so when you're Russia and China and you see that happening, you can, you know, it doesn't take a genius to see what they're doing.
Yeah.
You know, the old saying, he who holds the gold, you know, makes the rules. So it seems to be a very strategic play, that's for sure.
Sure. I could say if there's a future, possibly recently, it could be pretty soon, we could have a global currency crisis. Now, if you say with Russia and China, they start losing faith in the US dollar as a reserve currency, and they keep on upping the amount of gold that they have, and they're looking for alternatives, say Bitcoin as well, that they want to get away from the US dollar. And globally, yeah, that the faith is lost in the US dollar and it massively drops. What does that look like, you know, for gold? What does it look like for gold and silver? Do you think that we'll ever go back to the gold standard? Because the US used to have a gold standard, didn't it?
Yeah, that was the last. So 1971, Nixon removed that gold peg from the US dollar. Look, it's a hard one to pick because they don't like it. So the guys in power don't particularly like the discipline of gold because it removes their ability to do what they're doing. Now that said, this will be the first time in history that that's not happened. Okay, so what does it look like? You know, there's a number of theories around. So Jim Rickards, you know, publicly has one around the SDR, the IMF's standard drawing rights, which is essentially a basket of currencies of large players that have gold in the game. So his prediction of $10,000 gold is literally based on the SDR becoming a reserve currency and 40% backed by gold. You then have even the head of the Bank of England, okay, so one of the biggest central banks in the world, literally last week, suggesting that there should be a digital global currency to replace this reserve currency. So it will happen because the four most expensive wares in investment at this time is different. So these fiat currencies historically over the last 40 to 60 years, add that to 1971. The US dollar, its time is coming due. The fact is, right now, there's no heir apparent. The renminbi, the yuan, is not internationally tradable enough. So where this goes is a guess, but history says it's going to go somewhere that will be backed by gold again.
And this is where I get a bit excited with stable coins and potentially a gold standard pegged to, physical gold or physical silver stable coin being used potentially as, and this is aiming really high as a global reserve currency, like you were saying, a digital going into the future, that amalgamation of gold and silver back to a digital asset used as a stable coin. And I think that potentially could happen in the future,
Yeah, it's certainly, it's added a whole new dynamic that's not been there in the past in terms of that, that the security and the transferability that digital currencies provide and that peer-to-peer, there's a lot. It would seem we're heading that way, that's for sure.
Definitely. And, recently, and we saw the price of silver this morning and the price of gold over the last, recently it's been performing really well, and it looks really bullish for the future of precious metals and commodities in total as well. So as I look, there seems to be some sort of correlation between the negative yielding with bonds, the global negative yielding, and the price of commodities like the price of gold and silver. And only recently we had the inversion in the US with the 3-month yield topping the 10-year rate in the US bond market. So what are your thoughts on that, Paul?
Yeah, look, it's certainly, you don't have, we're up to $17 trillion, right, of negative yielding debt. So you are literally paying for the privilege of holding debt. That doesn't happen unless you think this is going to get a lot worse. Okay, you don't buy negative yielding bonds unless you think the price of those bonds are going to go up. Likewise, with the inversion of the yield curve, that's again just people expecting this to get worse. So bonds are just a financial asset equivalent of gold. Okay, except the difference is bonds have counterparty risk, and we just finished talking about that in terms of failure of fair currencies, whereas gold has no counterparty risk; it's no one's liability. So you're going to get that correlation. And then, you talk about that graph, that chart of negative yielding debt and the gold prices is quite remarkable. It's been highly correlated. But likewise, bonds are going up and hence the yields are going down and gold and silver are going up as well. So we're certainly, this is about money seeking safety and not just that, it's seeking safe assets that people think will go up in capital value. Based on things worsening, it's certainly, and when you see negative yielding debt or you see the yields that we're seeing at the moment, even in positive yielding, it removes that whole gold doesn't yield argument, right? Because nothing yields just quietly, so all of a sudden that's out of the equation as well. So gold is just sitting there as this asset with potential capital growth that doesn't yield, but that doesn't matter because nothing else is either.
Yeah, sure. I just want to move on to, the Ainslie Bullion. You've got one of your products is the Ainslie Intelligence app that you guys have been working on. And it's sort of what interests me is that it's specific to the Australian market. Now, could you tell us a bit about that as well, Paul?
Yeah, sure. So Ainslie Intelligence, and the AI acronym is an artificial intelligence program that is different to a lot of other sort of quant trading things. It doesn't just look at technicals and have parameters around which it's told to act. This is a deep learning AI that took a long time to develop, but it looks at all sorts of things. So it's not just looking at financial metrics, it's looking at sentiment, it's looking at social, it's looking at a whole host of 120 things that it's searching, and it's not being told what to do. Okay, so this is actually something that is removing that human emotion element to establish correlations and calls that it's getting remarkably well.
Yeah.
So, and then whilst that's all very complicated, we then present it in a very easy format where on a range of assets pairs, we just say buy or sell, or it says buy or sell. We don't intervene. So it's giving a call every day at 2 o'clock, where at one stage it might say this has now turned to a buy or this has turned to a sell. You're right, it does lean towards Australian dollars because most of the things out there are US based, so we wanted to make this handy for Australians, but we also have US dollar pairs for most of the crypto. So it does currency, it does commodities, so it's gold, silver, oil, it does crypto assets, and it gives Aussie and US dollar pair for most of those. So it's look, we're at pains to say this is not a perfect thing. We wouldn't be. You can get this for just $25 a week. Okay, this is an additional tool that will have you getting it right more times than wrong. But probably the one thing, because I'm just looking at the outperformance. They're in the hundreds or tens and a percent above. If you just bought and held. But where it's underperforming right now is in gold and silver. Because the fact is, it doesn't know what Trump's going to tweet tomorrow morning.
Yeah.
So it's as good as it can be in terms of taking that human emotion and looking at hard facts. But it's not going to get it right all the time. It's something that gets it right more than it doesn't.
Oh, great stuff, Paul. Really interesting, mate. Well, I'll just give a quick disclaimer. I'm not a financial advisor. Do your own research. Not saying to go and get involved with Ainslie Bullion, but I like it. Australian project, Australian company. Really interesting. Really great concept. Digital assets, pick the gold and silver. So worth checking out for yourself, guys. Paul, it's been a pleasure talking to you, mate. And I look forward to maybe seeing you when I pop down Brisbane sometime.
Look forward to it, Jamie.
Great, mate. I'll put the links down below if you want to check out Ainslie Bullion, if you want to get involved and you want to get hold of some of them digital assets for yourself. So, okay, Paul, you have a wonderful day, mate, and I'll see you later, hey?
Fantastic. Cheers.
See you later, mate. Bye.